Hi, everybody, and welcome to Traders Insight. I'm Sam.
And I'm Matt.
It's nice to have you guys here today. So we wanted to take a look at our top 3 stocks on our watch list today and just give some insight into why we chose them and what we're looking for. So let's start out with Pfizer.
So I think Pfizer we can see here, I'm sure you guys are familiar with the 21 period moving average. It's just simply the mean price. And we usually class two daily closes below the 21 period moving average is a sell sign. You get bearish, and two consecutive closes above the 21 EMA, you go bullish. As you can see here, Pfizer's had the sixth day below the 21 EMA. You can see it's starting to roll over. And if we were just to start to put this into context, let's draw a few trend lines just to see where the support is broken down. So it's the first one, go from there, join it up to there and pull through. Okay, it first broke that one, and as you can see on the previous day, you see this big spike in the handle pattern here. You can see it came up and tested the trend line and got rejected. And it just looks like it's completely broken its upwards trend. So for me, I'll be looking to sell calls or buy put debit spreads on that, on hopefully some sort of pullback towards the 21 period moving average.
Right, so we're looking for it to get up to about 34.
Yeah.
So let's take a look at the options right now. So with this, you'd be looking at the weeklies, right?
Yeah, I'd probably be looking at the 4-day or 11-day. I think the 4-day will be the best to sell volatility. And if we're going to be purchasing premium, we want to give ourselves a bit more time, just so we've got that kind of insurance in the time as well.
So we'd be looking at the 34 calls to sell, right?
Yeah, we're going to be looking around the 34, 33.50. It all depends on what premium prices we can get. Obviously, with this low volatility environment, we're not going to be able to get out to a 1 standard deviation and collect, a good premium. So we are going to be closer to at the money.
This is still Delta 22. I mean, even if we're selling these 34s, if we saw a bit of an uptrend right here, this would probably get up to about Delta 30, Delta 35, and then we could sell the calls for probably 18
well,
cents.
let's have a play around. Let's try and sell a 1 strike wide call spread.
7 cents on 50 cents. I mean, it's not great.
Okay, so that's not what we want. Let's try and open the strike to 35 and see what we get there.
10 cents.
Okay, so it's 10 cents and $1. Okay, so that's still it's still not good enough. That's not good enough for me. Let's go to one out the money. Let's go to the 33.50.
And if you're bearish on this, having taking the at the money spread wouldn't be too much of an issue, especially with only 4 days left.
Yeah, not at all. And what you're looking for as well, you're trying to coincide it with some of the technicals that we use here at Traders Insight, and that's momentum plays. So what we would be doing is that's far better. That's much. I'd be much more happy taking that trade, and it's most likely a trade that I'm going to be taking this week. What we will be looking for, though, in order to get into this, is some sort of momentum play on a lower time frame. So, for example, a 15-minute, a 30-minute, or a 60-minute. You guys can use something, for example, like a MACD, stochastics. We use a thing called the TTM squeeze, which is Trade the Markets from John Carter. And that kind of it kind of gives you a heads up before the stock makes its move.
Did you see that it just gapped down like 50 cents?
Yeah, it's probably following from how the market futures opened this morning. And it wouldn't surprise me if it erases all its losses. Things like that usually happen. Okay, which is the next one?
Get rid of this as well.
So that's the first bearish play.
Next one, I believe, is OXY. OXY.
OXY. Okay, and let's change this to a daily as well.
Let's go back to a daily.
So this is nice. So originally, what we thought here was it was actually having a bullish breakout of the downwards trend from up here all the way down here, and we thought it was going to break out, providing that when it did make this bottom here and here, it actually kept this trend line. As you can see, it's broken this trend line, and we are looking for a resume of the downwards trend. Again, you can see it's a little bit extended there. Hopefully we can it'll be nice to get some sort of snapback rally towards the 21 period moving average again, where we can pick up some calls and sell some calls as well.
It may be difficult with the Greece situation going. You see the market's open 2% lower. It's going to be difficult for it to get back up to that.
Yeah, exactly. That's why I think I'm going to be watching it closely today. With the S&P's rally, with the futures rallying this morning, erasing the majority of its losses, if we can see some sort of strength in the open, filling up some of those orders that have been placed over the weekend, I would look to pick some weekly calls up on that and sell some calls on it.
So in this case, you don't want to chase it.
Definitely not. I think that's the worst thing you can do in this situation. I think first of all you need to remember that there's always going to be plays. And never to chase, because people who chase, they get stung.
Yeah. So let's take a look at the trade. Better options.
Much better volatility. I mean, let's see what the 2-strike option we can get out.
Let's check out what today's option.
The IV is. Yeah.
Let's close all these. 33%.
Okay, it's better. It's better.
So here, I mean, we could go strike and half white out.
Yes, let's go down to here because we're.
The calls,
let's go to the 75.50. Let's start off there. 2 strikes out.
22 cents.
Okay, that's not bad. That's virgin on 50-50.
It's pretty good, actually.
Okay, so in that case, what we can do, let's go another strike out, because remember, guys, I'm willing to do a risk in 3 to make 1 bet here. That's
still 50-50.
That's also nice as well. Okay, so let's close this options chain.
We go another. We
could potentially go another strike out.
Here we go. This would be it.
That's looking nice.
1 to 1.5.
Yeah.
So let's delete this.
Okay, let's do this. Let's try 75. Let's go to the 76 and do a 1 strike there.
So it's always better to have a bit of
cushion,
room.
Yeah, absolutely. So this is still looking good. The credit's hardly changed here. Obviously now the markets aren't live. Exactly. So we will be subject to a bit of change in the premium prices come market open, but we're going to stay within 1 or 2 cents of this. And even doing a 1 strike wide, you're still risking 1 to make 1 essentially.
Yeah.
So let's delete this again and let's go to the next strike out. Let's go to the 76.50. Because again, guys, you want as much cushion as you can. You're not looking to make the home run trade. You're looking to fight another day. Yeah. So let's click and confirm and send for 10 lots. That's really nice.
Yeah, that's getting better.
That's definitely a trade that I'm going to be taking right there.
Almost 2 to 1, and you're giving yourself a lot of cushion there.
A lot of cushion.
Yeah. So that what was that at?
76.50. So if you're going to chart there and you're looking at the 76.50,
let's just draw a price level. So zoom in down here. So 76.50 would be right here.
Yeah. I mean, on the chart it doesn't look that much, and it doesn't. However, if we can get some sort of snapback rally towards that line this morning, and the market open, we'll be able to get out to the 77.50, almost the 78, at the same premium price, and hopefully benefit from when it resumes its downwards trend again.
So we've looked at 2 bearish plays today. Let's look at the bullish play of the day with Tesla, which is just keeps on going up.
It keeps on going up, and let's draw this trend line from down here again. When we called this in the trading room, we actually called this play when it broke out of this downwards trend. So we called it exactly where it came to test this 21 period moving average here, and we actually got out. So we got in around 205, and we actually got out at about 220. Now, if you were a long-term stock player here and you're still in this, and you go across, you go with our assumption and trading plan of you stay with the stock until it closes 1 day below the 21 period moving average. You can see here it hasn't even closed 1 day below it. So if you're still in it, if we would have kept to our trading plan, which is kind of silly of us not to, we'd be looking at really good gains here on options.
Even if you got in here and let's go 90 days out. Have we even gone 90 days since that beginning?
Not quite, no.
So if we had taken 90-day calls, we'd be looking at 60 points.
That's 7-8 times your money there. That's fantastic. And let me explain the reason why we picked this out as a long. Of course, we want some sort of pullback. Okay. However, what we want to look at is,
should I pull up a new window?
Yeah, new window. So this Tesla has an unusual amount of high open. Short open interest, which means there are a lot of funds out there and people who have short positions in this stock. And essentially, when their stock price acts like Tesla has done, it's ripping the heads off shorts. It essentially makes people who are short get out of their positions and essentially go long. And as we can see here, the short percent of float is 25.3%. Anything above 15 to 20% is classed as considerably high. Therefore, I think Tesla's going to keep on going up. After maybe a day or two of consolidation or decline, and eventually reach all-time highs.
Well, let's just explain the short as a percentage of float. It means that 26% of people have short positions.
Yep.
So as the stock climbs higher and higher and higher, it's gonna force people out. They're gonna have to buy the stock back.
Yep.
In order to cover their positions.
Yep.
And that's just going to fuel the growth of Tesla even
fuel
more.
The growth. Yeah, and
exactly.
To give you some examples, this doesn't quite replicate it, but to give you some examples of how the short percent float works, is if you look at, like, for example, GoPro and Alibaba when they first IPO'd, I'm sure you've all heard of them. They just kept on going up and up and up and up and up and up and up, and they didn't stop. And that's because the amount of short open interest that was there. So many people were short, they kept on getting their heads ripped off, and eventually they had to switch the positions to long. So if we were to draw a target on this, we would actually want to do a fib retracement, that's it. And we're looking at the extensions from the high here, from 291 down to the low of the 181. Now if we just go and edit these fibs.
Yeah, let's edit. So let's click all these off.
Yeah, let's just leave the extensions on there. Let's put the 1.272 in.
272. Okay.
So we're actually looking for it to go to new highs of 321.
Wow. So,
on any pullback to this, I'm going to be selling as much puts as I can, as far away as I can. I'm going to be taking one or two debit spreads as well. Now, the reason why I'm trying to get away from buying debit spreads, even though this is a low vol environment, is because we just don't know what the market's going to do at the moment.
Exactly.
So if you are going to buy calls, you have to we're in a much less certain time over the past few weeks and now than we were a few months ago. Therefore, the volatility is going to slowly just erode your option premium away. So I'd rather be safe than sorry.
Well, great. Those are our top three for today, and we'll be back tomorrow with our next top three. And don't forget, this Friday we're going to have a webinar where we'll be answering all of your questions and helping you guys out with some of your trades.
Yeah, absolutely. I think maybe one thing we can look at is actually how we use the trend lines in order to make very easy stock plays to make returns like we could have potentially done in Tesla.
Exactly, because this is an easy setup. So we'll cover that on Friday in our webinar for when we cover trend lines, and I think that'll be the first one of our Traders Insight webinars.
Absolutely.
So we'll see you guys then. And I don't know, do we have a going away tagline?
Good trading, guys.
Yeah, good trading.